My name is Angela Owens with Phenomenal Business Solutions, and I help car dealerships streamline their finances, boost their profits, and grow their businesses. Today, I want to talk with you guys about tax strategies. So we're going to drive down taxes, and I'm going to give you deduction strategies for your business, for your dealership. So here's the introduction. Why do the tax deductions matter? For one, you can get tax savings directly. Tax savings directly impact your dealership's profitability. Extra cash flow can fund growth opportunities such as marketing or inventory expansion. Staying compliant with IRS regulations avoids costly penalties. And today we're going to dive into key deductions for car dealerships, effective expense tracking strategies, and common mistakes on and how to avoid them. Sorry for the stuttering and stuff, but let's keep it going. So these are common dealership tax deductions. You can deduct your vehicle inventory costs. That's the prices that you pay for it, the freight, the auction fees, reconditioning, anything attributed to each individual vehicle, you can deduct that. But you only deduct it once you sell the car. And then you can deduct advertising and marketing. That'll be your Google ads, social media campaigns, radio, events that you put on, and events that you attend. Like if you attend trade shows and things like that, you could definitely deduct that. And you could also deduct facility expenses. That's your overhead, rent, mortgage, utilities, insurance. If you have like Netflix or Hulu that you show in your waiting area for the customers and stuff, you could definitely deduct that, and your internet and everything that goes on at the lot. You can also deduct your employee costs, which is, of course, your wages, payroll, taxes, even bonuses. And if you have 1099 people, you can definitely deduct those expenses as well. And your professional services like tax prep, legal advice, and consulting fees. If you bring someone in to do business development training for your employees and your staff, that is also deductible. Just think about, anytime you have to get some professional assistance. You can also deduct your technology and software, so your DMS service, your accounting software, any additional CRM tools, if you have outside services that you use to keep up with your reconditioning, you can definitely deduct that as well. And different apps and everything like that, those are all deductible. So when you're tracking your expenses, the best practice is using accounting software. I prefer QuickBooks, but there are some other alternatives out there. But I think QuickBooks, since they're the most known, they are most likely going to be the only ones that will allow integrations with your dealer management services, because those services are familiar with QuickBooks. And you also want to make sure that you keep your business and personal expenses separate. That's a really big thing. It helps to keep your accounting smoother, especially if you hire someone to handle your bookkeeping. They don't have to sort through personal expenses as well. And then you want to also keep receipts and documentation organized. So make sure you put everything like in folders and scanning. I like paperless stuff. So for me, I would suggest, if you can scan everything, and if you have apps, you can definitely take pictures of that and it will upload it into the app, especially like if you use QuickBooks Online, they have an app that goes along with it. So if you make a purchase, you can snap the receipt right there and it will add it into QuickBooks. And then once you start categorizing your transactions, then you can match the expense with the transactions in QuickBooks. And there's a pro tip that you should schedule schedule a review every month for your finances so that you can stay on top of things. And I suggest in some cases you may want to check bi-monthly, but for the most part, at the very least, check every month to look at your finances and see what's happening with your business. Okay, so then maximizing depreciation. So section 179 deduction allows you to deduct 100% of equipment and vehicles that you purchase for business use. And sometimes it's better to depreciate over time, and sometimes it's best to go ahead and do the full deduction. And when it's time to do your tax, that's a good time to see if that which way will benefit you the best. And then there's the bonus depreciation where you can write off 100% of qualified property. So again, there's benefits to depreciating over time, and there's benefits to depreciating all in 1 year. So you definitely want to make sure you review that and see which one is going to benefit you the most. And yeah, so like the different things that you could deduct, like you could deduct your diagnostic tools. If you have a shop at your office, sometimes you'll probably be purchasing a lot of things for the mechanic to do their job and different things like that. And some of them you can, you know, deduct all at once or deduct over time. So again, just get with your tax preparer and see which way is going to work best for you. And so here's some common mistakes. One of them is misclassifying expenses. So you can only deduct up to $25 per person for expenses. And a lot of people just throw that into advertising. And sometimes it is advertising, but sometimes it's just going and so entertainment is no longer deductible for businesses. So if you went out to a happy hour and took a client, you can no longer deduct that type of thing. But if you bought a gift of $25, then that's it, and it's only for per person. But if you bought a gift for $100 for someone, then you still can only deduct $25 of that. So just keep that in mind. But the solution for misclassifying is to create clear categories in your accounting system and make sure that you are putting things in the right category. And you can make your categories as detailed as you want to so that you can keep track of everything like that. Another mistake is failing to keep adequate records. So you can lose deductions due to missing invoices. So make sure that even if you're using your dealer management service, make sure that you keeping track of that and making sure that it gets into your accounting service. That way, when you run your reports, everything will be right there and you don't have any discrepancies and stuff like that. Then missing deadlines. Penalties can cost up to 5% of unpaid taxes every month. So definitely get with your tax professional so that you can keep track of those dates, and they should update you when things are due or when things need to be checked on, especially like if you do estimated taxes, they should be reviewing your income and expenses quarterly so they can guide you correctly on how much you need to pay and if you need to pay. So definitely keep track of that. And then you want to plan ahead for tax time. And that's, you can work with a professional to collaborate with a tax advisor who understands dealership operations, gain insight into industry-specific deductions and compliance. So that is definitely very important. So if you don't understand taxes and how it works with your dealership, you definitely want to get a professional that understands dealership. And then you want to do a quarterly review. That's what I was talking about with estimated taxes. So even if you don't owe estimated taxes, it's still good to have your advisor to look at your financials at least every quarter. So Then you want to do a tax strategy session. So you can book a personalized session to uncover additional savings because every dealership is different. Some dealerships offer mechanic service, some dealerships offer car rental services, detail services. So every dealership has different needs. So definitely want to get a strategy session to see what is specific for you. And that is all that I have for today. And if you are interested in getting a free profit and cash flow analysis, I would love to sit down with you and see how you can maximize your profit and see if there's any ways that you can increase your income and grow your business. And I could also assist you with taking advantage of certain tax deductions and things like that. So I really would love to speak with you and thank you for joining me today and see you next week. Bye.